We have a pause. We already know that, of course. We have a pause of 90 days, and this means now that it will give time for the US to negotiate with its trading partners if tariffs will remain in play or if they will be removed for something better. Now, from a technical point of view, does that really change anything? It doesn't, unfortunately, at least not for now. So if you would look like at a monthly chart, okay, then you can say if the month would end now, then yes, you have a bullish candle. But we're just at the 10th of April now, so it will take a number of days until the month is over. Even if it would close like this, it would be typical for at least to maybe correct half of this range, which means that we would go down maybe to 17,500, maybe 17,000, and then maybe pushing to the upside. So that's just on the monthly. Now on the daily, the RSI has not been able to push above the 50 line. So this is as a good opportunity to short sell as we have here. Normally the price is stuck above, and then if we go back to the 50 line, that will be when you can usually buy. Whereas in a downtrend like this one, when it reached the 50 level, that's a good time to sell. Another observation as well, which is probably the more important one, is the fact that we have head straight into resistance and the price has turned lower. Now you cannot see it here, but there is a 20-day moving average just above this level where the price was rejected here and here. So the 20-day moving average going through here. So overall, I would say is very likely that we'll go down to maybe 18,000, maybe 18,500 or something like that, and then we'll see what happens. This is, if anything, if we didn't know anything about anything, this will be a good opportunity to short sell. Okay, being bearish below here. Alternative, you don't want to be too close to the price action, it's going to be up here. And as well, from a 200-day moving average, this is probably going to trade a little bit lower, and for now it's going to cap price. So that's my take on the NASDAQ 100. How about the actual political side of things? There's a few reasons as well to be bearish. One is the fact that China now has a 125% tariffs on anything going from China to the US, and anything going from the US to China has tariffs of roughly 85%. So what's happening there is that we're going to see a significant slowdown in China in terms of economic activity. It will also impact the US directly as well. All countries now have a tariff of at least 10%. So this is not great. And this is also going to weigh on economic activity. So overall, we're not in a better position than we were before. But it is obviously good to see that we're having this pause. So I think with the holidays coming up, the Eastern holidays coming up now in the next 2 weeks, I think it's going to be a bit quiet there, and then hopefully we get something. Now, let's look at it from the bright side. From the bright side, we know now that Trump has limitations on how aggressive he wants to be. We saw losses in the stock market causing Elon Musk, Bill Ackman, and a few other big players distance themselves from Trump. We also know that the US 10-year government bond yield rose quite sharply. And if you remember Liz Truss, the UK Prime Minister, she lost her job when yields were going up too fast in the UK. It was not close at all like that in the US, but we were going in the right direction. The wrong direction to be correct, but we were going up. So that is something to bear in mind. A final thought on this is realistically, we'll find some sort of deal. And realistically, we'll have lower tariffs, hopefully, between the US and the EU and the US and many other countries. That will be beneficial for the world economy, but it will not fix one of the core issues that Trump is looking to fix, and that is to get manufacturing jobs back to the US. But if we have low tariffs, it's good for stocks, okay? Something that is not too good is if the US would force other countries to buy things they might not need. There is a reason why maybe the EU is buying oil from other places rather than the US. could be prices, right? So if the US starts to say, you need to buy arms from us, you need to buy this, you need to buy that, then it's not just related to Trump in general, but we all know what happens when governments get too involved in the free markets. We tend to have bubbles that cause more harm in the long run, and many times even in the short run. What's your take? Share your outlook below.